Welcome everybody, and thanks for joining us to our year-end tax planning video series. Today we're going to be talking about all things individual year-end planning. My name is Matthew Thurman, and I'm joined here with Zach Kanady. Zach, if you don't mind, just introduce yourself and some of your responsibilities here at the firm.
Thanks, Matthew. I'm a supervisor here at the firm in our dealership department. I work on tax, review, audit, advisory services, helping our clients buy, sell dealerships or other companies. And with that, I work with a bunch of people. I work with partners, managers. I manage a lot of staff, and so I'm just involved in a lot of things.
Yeah,
so, yeah.
That's awesome. Today we're going to be talking about the individual side of things for year-end planning. Right off the bat, let's talk about the inflation adjustments for a lot of these tax brackets. I know people want to hear about those. Last year they were a lot bigger than normal. What are they looking like for this year?
Yeah, they're more like, I think last year they were closer to like 7.5%, a few even higher than that. This year it's more like 5%, which is closer to that standard increase that we expect. You know, our top tax brackets for our single people are 578,000 plus, and then 609,000 plus in 2024. So 23, they're 578, 24 is 609. And then married filing jointly went from 693,000 to 731,000.
Gotcha.
And then you also see jumps in your standard deduction, which both of these, you know, technically help taxpayers, but it is minimal help. But standard deduction for a single person jumped from 13,850 to 14,600, and married filing jointly is just the double of both of those. So 27,700 to 29,200.
So just something to maybe revisit. People that were teetering on the edge of itemizing standard might just need to take a second look at that for this year.
Yeah, if you're on that border, that's something you want to look at. It will have like a few $100s worth of impact on your tax, but that can be a big deal to some people.
Gotcha. So far as I know, recently we've had a lot of natural disasters with hurricanes. What are some of the relief that the IRS came out with for hurricanes? People affected by those.
I was actually surprised. The IRS, I feel like, doesn't typically extend payment deadline. Usually they say, you know, you have more time to file, but you still owe us money today. But they actually extended the payment deadline as well, I believe. And that's for the entire states of North Carolina, South Carolina, Alabama, and Georgia. And then some counties in Florida, Tennessee, and Virginia. And the IRS has like issued, you can go on their website, and it's pretty easy to find of which counties are subject to those extensions. And it's extended all the way to, I think it's May 1st, 2025. So if your 2023 tax return doesn't have to be filed and your tax doesn't have to be paid until May 1st, 2025.
I gotcha. Bought a little bit extra time. Yep. Also on the hurricane topic, with casualty losses, I know that's a lot of nuanced answer there maybe, but from a high level, can you give folks an idea of what they could be looking into, or maybe the questions to be asking their CPA so far as damages from the hurricane and how there may be tax deductions available? Yeah.
So from a high level, what we're looking at is anything that insurance isn't going to cover, and you have to be in a, like, the IRS has to declare that it's like a disaster zone. So not just any, if a tree just falls on your house, it doesn't count. But if it was in the hurricane that they're calling a federal disaster, then it counts, right? Okay. And if the cost to repair your home was $100,000 and insurance is only covering $80,000, you may be eligible to deduct the $20,000 difference, which can be a big deal for people. So, and that's at the personal level. Yeah. Businesses, there's a whole other set of rules, and it actually seems to be easier for them to take casualty losses on income-producing property, because the big difference there is personal property versus business property. Yeah. And but for those affected by the hurricanes, that's high level what they need to be.
Something to maybe be aware of, have those conversations.
That's right.
With your CPA.
Yep.
And then maybe if they've had some damages, or just in general if they're looking at upgrades, what are some of the green energy tax credits that they can be aware of? I know some of those rolled out last year. What are some of the more popular ones you've seen?
Yeah, I think most of the big ones on your home are just like windows, insulation. I think you can get up to $3,200 in 2024 of credits. And then some of the other, you know, green energy tax credits that have changed this year are the EV credits. They rolled out a used car EV credit, which is helpful because a lot of the new car EV credits, the car had to be under, I think it was $80,000 or something like that, which we all know is not a lot of EVs. You know, a lot of them are very expensive, so then the car didn't even qualify for it. And your income level had to be under $300,000 as a couple, and likely you were not buying a very expensive car if you didn't make a lot of money. So the credit didn't really make any sense for them. But now used EVs can get up to $4,000 credit, and those are point of sale. So the dealership can give you a discount at when you buy it. You don't have to buy the car, pay all the cost, and then get the credit later. They will do it at the point of sale, which is pretty unique.
Yeah,
So
that is a little bit different, I feel like, than some of the other ways that people were filing.
yeah.
Switching gears a little bit to bonus depreciation, started to have some adjustments in that area last year. How is that continuing in 24?
Yep. So as we discussed last year, that's going to sunset in 2026. And when we say sunset, we mean it'll go away, right? And we've had 100% bonus depreciation from 2018 to 2022. 2023, we had 80%. 24, we're going to have 60%. And then 25 is 40, and 26 is 20, and 2027 is 0. So with that, Section 179 becomes very important, right? Because there's a lot more limitations on Section 179, which is why bonus was so favorable. But now, being able to deduct only 60% of the cost, you're going to be trying to fit in those rules of Section 179 more. You're going to be putting more effort into that, into making sure you're under the limitations, the asset qualifies for Section 179. It might affect your purchasing decisions.
Something that just needs to be, it's not as easy of a decision as it was in prior years.
That's right. In prior years, you buy a 6,000-pound truck and you're good to go.
Yeah.
You know, it just
You got a little more nuance now
That's
to look
right.
at it. One more thing that I know sunsetting is regarding like estate taxes. Can you get into a little bit about how that might affect some people when they look at gifts or thinking about their estate planning?
Yeah. So this is very, very important for high net worth individuals. This is probably one of the biggest things with Trump's tax law that was so favorable to high net worth people. The gifting limitation, your lifetime exclusion. So you used to be able to give I think it was $5-6 million without paying tax on it, right? Throughout your lifetime. Trump essentially doubled that, but in 2025 or 2026, all these things are sunsetting in different years. I think it's actually the end of 2025 that that's going to go back to the old half, basically get cut in half. And if you have $20 million worth of net worth and you don't want it subject to the estate tax, you want to start gifting that, right? And so now is the time when you can gift more tax-free and avoid that estate tax. And so it's a huge deal. It's for people that you're worried about your estate tax and you are high net worth, this might be the most important thing for you this year.
Yeah.
So.
And I think it's a use it or lose it type of situation, right?
That's right.
It'll just go away. It's not like you can use the piece that's disappearing. You've got to use all of it to be able to capitalize on the doubling.
You got to do it now. And, you know, with recent economic struggles, and John Paul Davis is going to get into this later, but the valuation on some businesses is lower than ever. So now's the time to gift, because the gifting exclusion will be at the lowest value. And then when that appreciates, then you essentially just gifted way more for free, right? If you gift your child or to a trust $5 million worth of a business today that in 4 years was worth $10 million, you just gifted $10 million with only using $5 million of your exclusion. So that's really the name of the game.
Gotcha. So me looking at, so far as we're coming up on December 31st, what are some things that you're talking with clients and just having people be aware of that need to be done before year end?
Yeah. First, I would make sure that your CPA is talking to you. I think that, if you're not engaged with us, if you're engaged with some other CPA and they're not talking to you around the end of the year, that's a problem. That you're going to miss out on things. Second is Q4 safe harbor, right? We want to pay in 110% of last year's tax or 90% of our expected current year tax in order to avoid penalties and interest. And so if your income has come down, that 90% becomes very important, right? You want to hit that on the money or be very close. Otherwise, if you're making a lot of money, those penalties and interest add up quickly. And then PTE elections. With the with Trump's law phasing out soon, these will be less important, but right now they're still very important, and this is something that you should look into in order to deduct the state taxes that you can no longer deduct on your personal return. And then just gifting, again, I think that one is so important, and if you're a high net worth individual, you need to be talking about it. It needs to be part of your plan. So.
Awesome. Well, thank you so much. Thank you guys for watching. You can go to our website, hhmcpas.com. There will be information there. You can reach out to us, get in contact with us. And we hope that this was helpful. Hope this maybe sparked some ideas for you to have conversations with your CPA. And we look forward to seeing you in the next video.